This is Jim Emter with Van Ahn & Company, Alexandria, Minnesota, with their closing grain and livestock comments for August 2nd, 2016. Corn market down 1 to up 3, nearby down 1, deferred up 3. Soybeans nearby down 10, deferred down about 5 cents. So the November was down about 8.5. The wheat market today down 4 cents in Chicago, up 1 in Minneapolis, down 2 in Kansas City. When you look at the grain markets, the major moves here, a lot of reflection of the crop conditions ratings continuing to be very favorable. The markets were down harder today, but did come back near the close here to kind of settle just slightly weaker versus where we were trading. As we look ahead, we've got weather conditions that continue to point to these good conditions that we're seeing. So anticipations are for very good yields, but to try and determine whether we're a 168 and 175 corn yield, we think is a very difficult thing to do. And there are some reports of tip back we'll need to watch, but all in all, a good crop on the way. It's a matter of frost, freeze, hurricanes, some different things we'll have to watch in that regards. What we kind of see the markets doing here is stabilizing a little bit, chopping around, and kind of more of a range trade as we look ahead here once we kind of discover the lower end of the range. And we do think that comes here in the next 30 to 45 days as we kind of hear some of these big yields begin to surface and as we kind of work ahead in that regards. Important things we think producers need to be watching here. Carries in the market are growing right now. Be very attentive to opportunities. The corn carry around 25, 26 cents, and looking out to basis levels in that average vicinity for harvest need to be taken advantage of, in our opinion. Over in the feeder cattle market, when you look here, 90 cents, we were higher in the nearby feeders. Deferred's down 10, live cattle steady to up 50. In the hog market, up 25 to down 25 with the nearby leading the higher. In the cattle market, we've got some strong technical trade. We're right up against the downtrend line, so important for cattle to put together a nice trade here. If we stall and begin to fade here, you're going to have people calling for a run back down to the gap in the live cattle base, and that's nearly $5 to $8 lower. So some risk here. We need to be very attentive to what we do here as we close out this week. If we can get some strong cash, we could open up price counts to 119 live and 150 in feeders. If we fail here, we're going to be right back down to the lows very quickly. When we look at exports and look at cash undertones, we do have cash trading over futures, so there's some justification to go higher here, but we need that catalyst in the actual higher cash trade this week. The hog market, on the other hand, not a lot going, not a lot of strong export demand, good slaughter numbers around, so more of a choppy, subdued, lower trade here in the near term. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. Check us out at Farm Fest. We'll be in the egg tents.